Yeah, I'm running a little late.
Yeah.
Stop that. Stop that craziness. And let's go to there. And let's go to here and just do that. 3, 2, 1. And we're live. Yeah. You don't seem excited at all. Why aren't you excited, honey? And then there we go. There you have it. Well, I can slide it over just a tiny bit so I can see these better. Here we go. Getting ready to get. Look, oh, old dog's here. Roberto, Dan, how are you doing? Enfe, user still rise. Brandon, Percy, Jacob, Joe, sometimes Gary. Out of curiosity, Gary, what is the other times? We call you Peter, Oscar, Fred. The Heath 3. Old dog, no audio. Uh-oh. Uh-oh. Why is there no audio? Oh, boy.
I heard you.
What?
I heard you.
You heard me? Yeah, it's working over there. He got no audio also. All right. Give me a second. This is going to take a bit. Let's see if this works. I'm gonna put in my 2 cents. Gotta lift up the camera. Lift up the camera just a tiny bit. Is that better? Oops. Oops. And right about there. Nope. Turn the camera just a tiny bit. Wrong way. Right there. And there you have it. All right. Nothing yet? Can you hear it now?
I don't have you.
You don't have it? Nothing yet? More likes, more views, Faiz, no sound. How the hell can it be no sound? Can't hear? Ah, shit. If it ain't one problem, it's another. Okay, so let me reboot. All right, I'm going to reboot and see if we can go from there. So don't nobody go nowhere. And now,
Making a joke of it, I'm not making any light of it.
live, and there we have it. Live, and there we go. 3, 2, 1, and let's see if it's working this time. Okay, no, wait a minute. You had it on a couple seconds ago,
I had audio.
and you had audio a couple of seconds ago. Okay. Well, we had audio a couple of seconds ago, so let's see what happens now. You pulling it up again?
Brian.
Okay, pull it up. Let's see if it's working this time. Yard Boy, 2001, Connie, Jim Bibby, how you doing? Joe,
Can you hear you?
can you hear me? I don't know. You picked it up?
I found it.
Brown Eddie, Rosie Campbell, Shirley, can anybody hear me? All good? Joe? All right, Joe can hear me. Bo, Irona, Ian. All righty, seems to be working now. Hey, Jim. All right, seems all good. All right, all good now. Good. It works. All right, so just to let you know, my name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable, consistent 1% per week. Now, the funny thing is, we had 140 2 seconds ago. Now we're down to like 14. It's from 140 to 14. Is what it is. We'll reboot in a few minutes if it doesn't work out. All right, all that being said, it is Friday the 20th. Let's see what's happening and see what's going on. All right? So, I have no clue where the market closed because I haven't been watching the markets all day. I jump in, I do my trades, I jump out. Okay? And then what happens today? Well, we'll see. Well, let's take a look at a few of them. We got Verizon. That opened up nicely. Hold that thought.
I hear they got it up and running.
Yep. No, I actually got a cable. What do you need?
I got a cable. They gave you a cable?
Yeah, give me a cable.
Okay.
Did you want to come say hi?
How's everything go?
It's going lovely.
Did you tell them that all of this landed you in Vegas? And have you done that? Have you explained
No.
why the background
No.
is different?
No. We just got here.
Oh, you
Hey.
this just started.
This is just getting started just
Oh.
now.
Good evening, everyone.
Yep. My son James, we're here in Vegas. We're in Vegas doing a live broadcast from the hotel room. Had a few technical difficulties, but all's good now. So let's keep on moving forward. Joe Berriman wants to take a look at Advanced Auto Parts. I like Advanced Auto Parts. So let's take a gander, see what Advanced Auto Parts is doing. Okay, so Advanced Auto Parts. A year ago, we're sitting at 60. Jumps on up to 90 before dropping to the bottom at 35. Can you imagine that from 90 to 35? I mean, come on, think about it. If you had it and it was at 90, now it's at 35, how would you feel? Well, let's take a look at the numbers. Like I said, a year ago, 60.33. We topped out at 88. All right, that's close enough to 90. Now from there, look at the last 90 days, which is the last 3 months. Okay, 90 days ago, we're at 38. Shoots up, drops down. Right around 35 is the bottom. When we topped out at 49 just 2 weeks ago. Now from 49, look what's happened. Last 30 days. Here we go, last 30 days. 30 days ago, we had a 30-day bottom at 37. Okay, we shoot up to the top, 49. What's cassava? Cassava is going to be a no because they haven't been around long enough. And I only like companies that have at least 20 years of increased dividends. I see it, cassava. Well, we'll take a look. All right, so anyway, we're sitting here at 43.52. We have our bottom was yesterday. See, the bottom's yesterday. Why is that so dark? Where is my TV monitor? Here we go. It doesn't give me the opportunity of making it brighter, does it? Menu. Were you messing with the TV?
I didn't mess with the damn thing. Let me see this. Keep talking.
Okay, well, let's see if we can make it a little bit brighter. Hey, Austin, dude, you're here early. Bought 600 Nike shares today. Will hold for a few years. Eric, why do you want to hold it for years? I like to jump in, jump out, grab my profit, and then say thank you very much. Okay. Now, what are we doing? So a 30-day bottom right here was yesterday. So today we're up a little bit. And currently sitting at 43, the 43.52s. So the 43.50 is going for 86 cents a share, which is 2%. Don't lean on that. At 2%, that's over 100% per year. I'm looking for 1% a week. This one, 2%. I might actually do this one. TV's not dark to us. Okay, well, we'll leave it alone, Bo. All right. So, Eric, you want to take a look at Nike? All right, Nike, NKE. So, take a look at Nike. A year ago, we're up here at 122. 122.79 for Nike. Way up over here. Now, why can't I see that whole thing? What did you do? My screen is smaller. I'm missing stuff on my screen.
There's only a handful
There
of
you
options.
go. That works.
Yeah, but now parts are cut off on the edges.
Don't worry about that.
There you go.
All right. That works. Can you get rid of that? The menu? Technical difficulties. All right. All right, so Nike. Here's the top over here a year ago, 123. Okay, she drops a little bit. Look at the big gap. Just around the Olympics, This thing drops from 95 all the way down to 70. Loses 25 bucks in a couple of days. I lost a lot of money on cassava. Hey, dude, cassava is not on my list, and there's a reason why it's not on my list. It's not 20 years old. I like 20 years old companies that have consistently been profitable. I mean, year after year after year. Because if you could invest your money, wouldn't you make sense to put into a company that's consistently profitable? Well, it does to me. All right. So the bottom, 7050, that was back in August. SCHD. Why does people want to look at SCHD? We'll talk about that in a minute. Hold up. So the last 30 days. Last 30 days for Nike. Okay. 30 days ago, Nike's down here at the bottom. Shoots up nicely. So here's your 30-day bottom. Here's your 30-day top. What usually happens after a 30-day top? Well, you're going to have profit taking. The stock has a tendency to drop, and we have a new bottom right here. In 2 days, on Tuesday, this is going to be the new 30-day bottom. Right around 75 and change. What is that? 74, what is it? 74.86. That's going to be the new bottom right there. So what happens then? Well, I like 2 days of the upside. Okay, 2 days to go to the upside before I jump in. Now, I like Nike. I got no problems jumping into Nike, but I want to make sure it's at the right time. All right, let's keep on keeping on. So look at the price. If I wanted to buy Nike first thing Monday morning, I'm going to be buying it at $78.80. Let's pull it up right here. $78.80. That's the current price. So the closest strike price to 78. 76.80 is the 77. And the 77 is going for 86 cents a share. That's well over 1% if you like Nike. Well, I like Nike as long as the numbers make sense, as long as everything looks right. What does Nike normally do this time of year? For that, we like to look at the seasonality chart. The seasonality chart, all the way to, let me open it up a little bit bigger so you can see it better. Okay. All the way to the left is January 1st. All the way to the right, December 31st. So the blue line represents this year. What has the stock been doing this year? Well, that's the current movement. Now, the red line represents 10 years of data. I need to move this cord. I keep tripping over it. Much better now. It's out of my way. Okay, but look at the last quarter. The last quarter from October to December. Well, we are in currently the fourth quarter. We're actually in week number 51. Okay? So for the rest of the year, for the whole fourth quarter, this thing has a tendency to go up. Okay, great. Well, I like Nike. The numbers look good. All right. Xbino, Intel. Well, I actually have me some Intel. INTC. Alrighty. Back to where we were. Okay, so here's Intel. A year ago, we're up at 51. And then we drop all the way down here to right around 18. 1836 is the bottom for Intel. And that's somewhere in September. From there, she jumps up and goes sideways and then drops back down again. Let's look at the last 30 days. Now, the reason why I like the last 30 days is it gives me a good idea of where the stock is going next. Is it guaranteed? No. Is it right all the time? No, but it's right most of the time. And what I'm looking for is odds and probabilities to be in my favor. So, if 30 days ago we're at a high at 25.50, today is the 30-day bottom. What usually happens after a 30-day bottom? Stocks have a tendency to go up. But here's the thing. I'm not going to jump in on Monday because today is the bottom day, which means there's a possibility that Monday might be lower. So I don't want to jump in today. I want to wait until Monday to see what happens. And if she does move to the upside, great. Then I want to jump into it. But I like 2 days to the upside after a 30-day bottom shows up. And at this moment in time, Intel has a 30-day bottom today. Okay, is that going to be the same thing for Monday? Well, we'll find out on Monday. And that's all it is. It's a waiting game. We wait, we see what happens. If she's up, great. I'll jump in. I don't mind. I like Intel. What I like best about Intel, look at the numbers on the premiums. Even going 4 or 5 strikes out of the money, I'm still bringing in something. And that's my objective. I want to consistently bring in some money. All right, cassava, C-A-V-A, is that correct? C-A-V-A. C-A-V-A-T-I-O-N, in the summertime. Okay, so cassava, all right, the Kava Group, okay, a year ago we're at $40. And then she jumps up to $170. Now from $40, okay, to $170, what is that, a 300% return? Okay, so from 40 to 80, that's 100%. To 120 is 200%. To 160, that's 300%. So a little bit over a 300% gain in just 1 year. Okay, so are you surprised that it's going from 172, now it's down to 115? It lost what? 55 bucks. Okay, that's almost 30% drop. Well, you have a big, huge run up, and yeah, there's going to be profit taking. I mean, think about it. Why would you buy a stock, have it jump up 300%, and then not get the hell out? Okay, it's not a profit until you take it. Okay, and it's only a profit when you take it. All right, so cassava, I don't really do this company. Reason being, let's go on over to Yahoo Finance. Yahoo Finance. Okay, and we're going to look up some Kava and see how consistent has this company been with their dividends and their dividend increases. Because that's basically what I'm looking for. I'm looking for a company that is consistently profitable. So once I'm on Yahoo Finance, I want to go down to historical data. Get to historical data, and I want to look at dividends only. All right? So this is one reason I don't invest in Kava. There are no dividends in the selected time period. Oh, what does that mean? Well, no dividends, no thank you. Because a dividend is a portion of the profits the company gives back to the investors. Okay, so if this company doesn't have dividends, well then how am I supposed to know if it's profitable or not? I really have no desire to read all the quarterly reports and the annual reports. I basically like to go directly to the dividends, because if a dividend is a portion of the company's profits, okay, and the dividend consistently increases, well, common sense tells me that if the dividends keep increasing, the profits got to keep increasing. And if the profits keep increasing, well, the dividends got to, because they go hand in hand. If a dividend is a portion of the profits that the company gives back to the investors, and that consistently increases, well, those are the companies I want to join. Okay, you got the dividend kings, 50 years of increased dividends. You got the dividend champions, 25 years of increased dividends. The dividend aristocrats, 25 years of increased dividends. Then you got the dividend contenders, 10 to 24 years of consistent dividend increases. This company doesn't have any dividends at all. So I'm going to have to sit in front of my computer to watch it, because the reason why, one of the reasons why I like dividends, other than the fact that it consistently, increases the dividends, it consistently shares more profits. Well, great, that's what I'm looking for. Share more profits. Well, I'm going to hang out more. All right. Com shorts. Kohl's. All right, let's take a look at Kohl's. Now, Kohl's a year ago was at 27.81. The top of the year was back in the end of March. Okay, back in the end of March was the high of the year. From there, she just sinks and sinks and sinks and sinks and keeps on going down. Well, where's the bottom for Kohl's? Well, the bottom was today. Okay, look at the last 30 days. 30 days ago, we're at 16 and a quarter. We jump up to 1860, big gap down, sideways, drops down, goes sideways again. Today is the 30-day bottom. Actually, it's the low of the year for Kohl's. So the big question is, do you like Kohl's? And do you like Kohl's at this price? Okay, could it continue to go down? Yes, it could. Could today be the bottom of the year? Well, yes, it could. Well, how are we going to know? We're going to know on Monday. Because on Monday, this thing's either going to go up or it's going to keep going down. KG, thank you for that. Uh-oh. Where was I? I'm missing some questions. All right, calm shorts. All right, so I actually have some Kohl's. I have Kohl's in several different accounts. Okay, fine. Now, currently it's at 14.22. So if I buy it at 14.22, I could sell the 14.50s and pick up, 1%. Or I could sell the 14s and still pick up 1%. Take out 22 off of that, that's 14, yeah. So the 14s is the safer trade because it's already at 14.22. Just makes sense. I like consistency, predictability, and safety. That's my objection. And I want consistent weekly cash flow. Terry, how are you today? Good to hear it. All right, somebody wants opinion on SCHD. Now, I know a lot of people like SCHD. Okay? It's a Schwab equity fund. But I don't like it, and there's several reasons why I don't like it. Reason number one, it has monthly options. Now, I don't like monthly options because I could only trade it once a month, and that's only 12 times a year. So if I'm making 1 or 2% for each option trade that I do, okay, 1% a month is only 12% a year. No, that doesn't work for me. 2% a month is 24% a year. All right, it's a little better. But I like getting 1% a week or 2% a week because 52 weeks, 1% is over 50% per year. That works for me. So do I do monthlies? No, I don't do monthlies. But here's the thing about SCHD. Let's go over to Yahoo Finance, put in SCHD, and see how well they have increased their dividends. Okay? So we look at all the dividends that SCHD has paid, and it only goes back to, 2011? They paid once. 2012, they paid once. 2013, only 3 times. And then 2014, only once. 2015, 4 times. 2016, twice. 2017, once. 2018. Really unpredictable with their dividends. I mean, look at the numbers. I mean, the question I have for you is, do you really check and research where you're doing, what you're doing? Because you're putting your money into this. Okay, so let's read some of the dividends, all right? Just for the fun of it. Okay, 2011, it was 4 cents. Then it jumped up to 5, then to 7, then to 8, then to 9, then to 10. All right, it's increasing. Nice. Okay, but from 10, it drops down to 9. Then it goes to 10, to 13, to 12, to 14, to 12. It's like 2 steps forward, 1 step back. And then from 12, it goes to 16, to 20, to 17, to 21, to 17, to 23, to 21, to 23, to 22. It's 1 step forward, 2 steps back. 2 steps forward, 1 step back. It makes no sense. Okay? But wait, it gets worse. It does. Really, you're thinking to yourself, it can't get any worse. But yeah, it does. Hold on. All right, let's take a look at the summary. Now, the summary gives you a little bit of the basics. Okay? Here's the bid, the ask, the open, the close, the high, the low, how much volume. And here is the dividend and the yield. Okay? The yield for SCHE. Do you understand what the yield is? It's kind of like the rate of return. If you put your money into the stock, how much is it giving you back? Well, this one here is paying 3.31%. Where did it go? Right there. See it? Right there. 3.31%. 3.31. The federal government pays more than that. Why would I put my money into something that pays 3%? I just don't like it. The numbers just don't work for me. I don't like monthlies. I don't like the fact that they're not consistently profitable. And I don't like the fact that they only pay 3% per year. So no, no, and hell no. Okay, Thiel Bar. XRP is not a dividend stock, so that's going to be a no right off the bat. Okay, the Cove. Can you look at DRI? The stock went up yesterday and its dividend date. Please elaborate. DRI. DRI. I don't think I've ever heard of it. Darden Restaurants. Okay. Now, Darden Restaurants, we just had a conversation about this 2 seconds ago. Monthly options. The numbers just don't work. I like 1% a week. Monthly options, it's only 12 times a year. So if I'm going to do a monthly option, I got to get at least 5%. And do they pay 5%? No, they don't. It's at 187.59 right now. So I'll be looking at the 188s. They don't have a 188, but they have a 190. Okay, 190 is paying 290. Okay, that's a 1.5%. 1.5%, well, I got to hold it for 5 weeks. Well, because 28 days, wait a minute, 28 days is 4 weeks. Yeah, 4 weeks. So I'm getting 1.5% for 4 weeks. And then I got to figure out, look where it is. Look at the last 30 days. Okay, here's the last 30 days with Darden. Up, down, big gap up, and continue going up, continue going up. Well, great. Awesome for people who bought it over here at the 30-day bottom. Okay, this big gap up, great. Now tell me where it's going to be in 30 days. I don't like monthlies trying to project 4 weeks out. Not that easy. Okay, I like going 5 days out because 5 days, okay, you got a 30-day bottom here, 30-day top here. What usually happens after a 30-day top, after a big jump? Profit taking. People are going to take their profits and this thing's going to sink back down again. So next week, hypothetically speaking, it should be somewhere down 176, 178. Because think about it. It's not a profit until you take it. And if you don't take it, the market maker will take it away from you. Because if the market maker gaps down, you just lost all your profit. Okay? So no, DRI, never heard of it. I won't trade it because I don't like monthlies. The numbers just don't work. Renee Santin. Santin? Okay, TSLY? No. Hasn't been around for 20 years? No. You make it so simple, it's genius. Yeah, thank you, Terry. Where are we? John, whoa. Is that an actual stock, Joe? John, are you just saying, whoa? WOAH. Is that a stock? WOAH. No, it's not. He's just commenting. Whoa. All right. Scotty. Scotty likes General Motors. I like General Motors. Love General Motors. Nice. Look at it. Okay. General Motors. A year ago, was that 36? Bottomed out at 34. Shoots up, pulls back, shoots up, pulls back. It's getting ready to turn right here. Let's take a closer look at it. I love General Motors. They've been in business for over 100 years. So a year ago, 36.09, bottomed out at 34. Look at the last 90 days, the last 3 months. Okay, we're here at 46, dropped down to 44, shoots up to 62, drops down right here. 30-day bottom was Wednesday. Thursday was higher, and today is higher. Okay, which means it's a nice opportunity to jump in on Monday, 2 days after the bottom. Look at the last 30 days. Okay, here's your last 30 days. 30 days ago, 55, shoots up to 61. 30-day bottom was Wednesday. Thursday was higher. Today's higher. That sounds like a yes to me. But before I say yes, let's go over and take a look at seasonality to give us an idea of what this company normally does this time of year. Well, normally, she just goes flat, sideways. No big up moves, no big down moves. Okay, it's General Motors. It's a question you need to ask yourself. Do I like General Motors? Does it make sense to buy General Motors, sell it to someone else? Well, look at the price. Right now it's at $52.19. The 52s are going for 62 cents. So when you take 19 cents off of there, and you're walking away with 50 cents. Okay, that's just barely over 1%. And that's a question you need to ask yourself. Okay, if I buy it at the current price, sell a covered call at the current price, at the market price, okay, you're going to barely make your 1%. That's what I'm looking for. Safe, predictable, consistent 1% per week. All right. So I like General Motors, but not that much. Big Knees. Hello. What stock are you currently talking about? That was General Motors. Okay, Big Knees. Look at like Kohl's. Park. Can you explain stocks to me like I am 5? I generally am so lost. All right, Park. Look at it this way. A stock is nothing more, nothing less than a partial ownership of a company. Dunkin' Donuts, Burger King, McDonald's, Walmart, Home Depot, Lowe's, General Electric, Consolidated Edison, IBM, AT&T, Verizon, Bank of America. These are all companies that are in the U.S. economy, which makes up the U.S. economy. Your aunts, your uncles, your cousins, your relatives, the guy down the street, your neighbor, they all work for these companies. They contribute to the great American economy, right? Now, 2 opportunities. You can invest your money into a company, and that company can either share their profits with you or put their profits back into the company for capital growth. Now, I'm not looking for capital growth, okay? So if I buy a stock, okay, let's say McDonald's, I own a portion of that company. Now, a very small portion, granted, and McDonald's does share their profits. So just for owning the stock, you get a portion of the profits from the company. So if you buy some stock in McDonald's, and McDonald's is profitable every 90 days, which is 4 times a year, they will give you a little bit of the profits. That's one wonderful thing about it. All right, Robert, we're going to get the strike, the site working this weekend. Genuinely want to get into the strategy. Robert, I appreciate that. I do. Thank you very much. Big Knees, thanks. All right, Park. Cool. Be rad. Be rad today. You know you're good when you have the most copycat scam accounts on TikTok. I only get 29. You know, there's some others that get, a lot more than mine. I really think I understand what you're doing, but would like it explained better. Oh boy. Now, Robert, you've been here a couple of times, right? Now, it was created for my 9-year-old daughter. Let me just reintroduce you to my little princess. Okay. Okay, we're going to go to the website, The 10-Minute Trader. Okay, we're going to go to Yahoo YouTube, to take a look at some of the videos of my daughter when I taught this to her. Live. Okay, that one's live. Videos. Here we go. And the oldest. Okay, now I'm pretty sure you've seen this
Hi, I'm
already.
JC, and as you being part of my internet website company, which my dad doesn't like me calling that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
There's over 20 days in the month of January. 21 days in the month of March. What does that mean? That means every single day you might get stocks. Every single day there's a different company paying out dividends. Yay!
Always makes me laugh when I see that. Now, that was my daughter when she was 11. Now, I taught her how to do this when she was 9. So we didn't have the ability to do any YouTube videos when she was 9, but we did when she was 11. So I had to keep her entertained. So yeah, I did some weird, goofy stuff. Made her laugh. That was fun. It was a nice interaction between me and my daughter. However, the trading strategy I am showing you was created for her. So it had to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. So that being said, 5 rules. Okay? Rule number 1, never buy a stock you don't want to own. If you don't want to own it, you don't want to buy it, you don't understand it, you can't give me a 3-minute elevator pitch on why you're buying it, don't buy it. Never buy something you don't want to own. Rule number 2, never sell at a loss. Defeats the purpose of the game. And it is a game. You get in, you make money, whatever. Okay? If you don't want to play the game, give your money to a money manager, a fund manager, a financial advisor. They'll do it for you. You're not going to get the returns that you should be. Okay? I could give my money to a money manager and they'll give me 4 or 5% per year. That doesn't work for me. Okay? Rule number 3. Make sure the company is consistently profitable. That basically means 20 years of increased dividends. That means every year, more and more and more money is coming my way. That's why I like dividend stocks such as the Dividend Kings, the Dividend Aristocrats, the Dividend Champions, the Dividend Contenders. And yeah, I take a peek over Warren Buffett's shoulders and I trade what he trades. Okay, there's a few other traders I take a look over their shoulder and I trade what they trade. All right, so that being said, rule number 4, make sure it has weekly options. I want weekly cash flow. The only way I'm going to get that is by companies that have weekly options available. Because as the stocks go up and down, I can get the amount of money I'm looking for by selling covered calls. A covered call is the safest trading strategy there is. You buy the stock, you sell somebody else the rights to buy it from you for the same price I just paid for it. So if I'm going to buy this at $52.19, I'm going to sell it to someone else at 52. Yeah, I'll lose 19 cents, but I'm picking it up here by getting 69 cents per share. Okay, take the 12 cents off there, I'm still making my 1%. Okay, and rule number 5, make sure the numbers work. What does that mean? What am I buying it for? What's the closest strike price? What am I selling it for? Is it more than 1%? Great, that's what I'm looking for. More than 1% on a weekly basis. Okay, 1% a week, it's over 50% per year. I can live comfortably on 50% per year. Okay, where was I? Okay, okay. All right, Terry, can we check Verizon? VZ, Verizon. All right, now Verizon is in a little bit of a pullback. Look at this. The last 4 weeks. 4 weeks ago was the high at 45. It just kept dropping. Now it's at 39.93. Now, don't get me wrong. I like Verizon. But I'm not going to invest in Verizon until it finds the bottom. Okay, because it's still searching for the bottom, and it's going to keep going down until it's done. That's what they do. They go down until they're done. All right, where was I? Okay, DSR. Yep, gotta love it. Part, can you explain? Yep, did that one. We're going to get the site work. Yep. Yep, you looked at that one. Okay, like that one. Yo. Verizon, we just looked at that one. Okay, WW made 2% for the week. Cool. If you do keep doing 2% every single week, that's doubling your money in 1 year. REITs are up. Should still invest. Okay, big knees. I do like a couple of REITs. Okay, the one thing I like about REITs is they are required by law to pay out 90% of their profits. Okay, so once they stop being profitable, well, then start getting away from them at that point. I'm behind the stock on DG, Dollar General, and the Gap, but both have dividends early January. What do you think it will do? KG, let's take a look. Dollar General. Okay, here's Dollar General. A year ago, Dollar General was at 130. Shoots up to 168. Drops all the way down to, was that 74 recently? 71. All right. Last 30 days was 71. Here it goes. Check that out. 30 days ago was the 30-day bottom. She shoots up to 85, drops back down to 73. But today was an up day, 76. Well, I like Dollar General. It is on my list. And as it goes up and down, I like to jump in, grab a profit, jump out. I don't want to hold on to anything. And a lot of people have a hard time with that. Well, don't you want to get the... No, I don't. I want to find it. Now, yesterday was the bottom. Okay. Today, she's up a little bit. One more day of the upside, and then it's a jump in for me. I like 2 days of the upside after the profits. Okay. Here's your 30-day high. Profit taking. Here's your new bottom right here. Okay. As of Monday, this will be the new 30-day bottom. Now, Monday, if it's higher, yeah, I'll jump in. Let's take a look. 76.70. The 77 is going for 87 cents. That's well over 1%. Dollar General, I love Dollar General. I do. I will probably jump into Dollar General on Monday if she opens up higher. Okay, the Gap. KG, let's take a look at the Gap. GAP. Okay. A year ago, the Gap was at 21.21. The bottom of the year, 18.28. That was in middle January. The high of the year, 30.75. That was the beginning of June. Well, look at the last 90 days. The last 90 days gives me a good idea of the momentum. What is it doing? Well, down, up, down, up, down, shooting up, down, up, down, up, down, up. Well, that's all stocks do. They go down and they go up. They do not come to your house and fold your laundry. They don't wash the dishes. They don't take the dog for a walk. They go up and they go down. Well, your 30-day high is right here, 26.50. Let's zoom on in, see what it looks like. Okay. 30 days ago, here's your bottom right here, 20.50. Shoots up, here's your high, 26.50. Well, from 20.50 to 26.50 is a $6 move. Now, a $6 move on a $20 stock is a little bit less than 30%. So she jumps up 30%. Yeah, you better be sure there's going to be profit taking. And there was. From here, she drops down, retraces, drops down again. 1 day of the upside, I'm looking for the second day. That could be Monday. So, hypothetically speaking, the Gap could be an opportunity to jump in. Well, it's at 24.11 at the moment. The 24.50s is going for 25. And that is over 1%. And that is what I'm looking for. So, briefly, really short, a good quality, consistently profitable company. Well, I like 20 years of dividends. Okay, The Gap, well, that's on my list. The numbers look good. Great. Am I getting my 1%? Well, yes, I am. Wonderful. What's going to happen Monday? Monday, she's either going to be higher or she's going to be lower. If she's higher, I'll jump in. If she's lower, I won't. It's actually that simple. Bama Redneck. It may jump up around the dividend date. Might be. Gabe, we already looked at Nike and we already looked at SCHD. Okay, Nike is a maybe when the numbers change. SCHD is a hell no. Double check the numbers. Really do some research on SCHD before you actually invest any money into it, in my humble opinion. Day, I'm struggling. Can you give a quick overview of your strategy? Yeah, simple. Buy a quality company just before the dividend as the stock getting ready to go back up again, because that's what they do just before the dividend, stocks go up. Buy it at the market, at the money, sell it at the money, at the market, covered call, collect 1% per week. That will give you over 50% per year, hypothetically speaking. Now, pre-qualified dividend stocks, the dividend kings, dividend aristocrats, dividend champions, dividend contenders, companies that are consistently profitable. I like 2 decades of consistent profits. Okay, if the company doesn't have dividends, no thank you. I need to be reassured in absolute worst case scenario if the stock drops, or should I say when the stocks drop. They go up, they go down. That's all they do. Okay, look at this, the Gap. She went up, she went down. She went up, she went down. That's all they do. Up, down, up, down, up, down. That's it. Okay? Good quality company, sell a covered call, simplest, safest trading strategy there is. It's consistent, and I'm looking for 1% per week. That's my main goal, 1% per week. Safely, predictably, and consistently. Hopefully that was a good interview. What do you call it? Overview. Zach, CEE. Zach, what is CEE? Central Eastern Europe Fund. No options, no thank you. Sorry, Zach. No options, no thank you. Not a stock. I want to ask about BlackBerry. Ugh, they've been dying a long time ago. How long after the EX date record until you can sell? You can sell anytime you want. Okay, but if you're looking to capture the dividend, here we go. There's 4 dates to remember. Okay, when you invest in a dividend stock, 4 dates. Date number 1, the announcement date. That's when the company comes out and saying, hey, this is Joe from IBM. This is how much money we made this year. This is how much you are going to get if you're a stockholder. The announcement date. Second date is the EX dividend date. That is the last day the stock trades before the dividend's paid out. And is represented by all these little green dots. Okay? Once I choose all my stocks, I put them into the calendar. The calendar tells me when to buy or when to look. I like to buy it 2 weeks before the EX date, just as the stock's going up, because the dividend's coming up and people like to collect dividends. All right. That being said, date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, the payment date. Self-explanatory. That's when you get your money. Now, interesting thing. Okay, this is something to keep in mind, and this is why I do this. Just before the EX date and the dividend date, stocks have a tendency to go up in value. So I like to look at a stock 2 weeks before the dividend date. And after they pay the dividend, the stocks have a tendency to go down. Tendency, not guaranteed, but a tendency. I like the odds and probabilities in my favor. So if I can put all the odds and probabilities in my favor, most likely I'll be consistently profitable. Terry, do you roll your options if you sell options and it comes close when you're not in profit? Terry, on a Friday, because I buy everything on a Monday or a Tuesday, okay? Because I want the highest rate of return on the options that I sell. Now, on Friday, just before the market closes, the options are going to expire at 3:59, which means at 4 o'clock you can't do anything. That means they are no longer valid. If you don't exercise it, if you don't do something with it, it becomes invalid. It becomes worthless. And 80% of all options expire worthless. So why would you buy an option if you're only a 20% chance of making money? No, I sell options because I have an 80% chance of making money. All righty. Gabe, Nike, we already looked at, is a yes. SCHD, no. Okay, now Gabe, I can get behind you with Nike. Nike I like. Okay, it's consistently profitable. Okay, they have some nice premiums. SCHD monthly, no thank you. The dividends are crappy. Take a look. They're not consistently profitable. What stock is that? I don't know. We were looking at a bunch of them. Robert, Cisco, CSCO. CSCO. Cisco Systems. Here we go. A year ago, Cisco Systems is right around $50. Drops down to 44, shoots up to 60, pulls back to 58. We're currently at 58.74. The closest strike price to 58.74 is going to be the 59. The 59 is selling for 25 cents to 34 cents. No. Sorry, the numbers just don't work. Now, I like Cisco, but the numbers aren't working. Zambino. Yeah, no, dude. Bitto, they have not been around for 20 years. Okay, Dasige, HPE. What the heck is HPE? HPE. Hewlett Packard. Okay. I thought HPQ was Hewlett Packard, but I guess it's a different stock. HPE, HPQ, both are Hewlett Packard. Okay. A year ago, we're at 17. We dropped at 14. Okay, shoots up, pulls back, shoots up, pulls back, shoots up, pulls back. Well, we're currently at 21.61. The 22s are going for 10 cents to 20 cents. No sense even looking at the charts because the numbers don't work. I want 1%. No. The Siege, if you like Hewlett Packard and you're okay with a 0.5% per week, that's over 25% per year. It's not that bad, actually. 86 is in the house. What's happening? BRAD, today you can sell on the EX date. Why ask why? James, how are you today? Gabe, SCHD, where looked at that. Tech issues. Do you hope that your positions are called away? Yes. That's what I'm hoping for. I want to buy on a Monday, sell covered calls on a Monday as soon as I buy them, and then hopefully between Monday and Friday have somebody call them away from me so I get all my cash back. Norberto, Sound, S-O-U-N, no, has not been around. Okay, all right, I'll take a look at it. Ready? S-O-U-N. Sound. Okay, take a look. A year ago, we're at $2. Goes from $2 to $5. $5 to $21. Now, answer me this question. Past couple of days, here's your high right here at 24. Yesterday was lower. Today, she's at 21.76. The 22 is going for $1.53. That's over 6%, close to 7%. But hold on a second. Does Sound, S-O-U-N, even have dividends? Okay. S-O-U-N. It says right here, forward dividend and EX date 0. That means it has no dividends. So why are we looking at it? Okay, this is a dividend investing channel. This company has no dividends, so why are we looking? Norberto, it's going to be a no. Can you check sound? In low term, would the growth stock will outperform dividend stock in 10-year horizon? Well, Norberto, it depends on what it is you're looking for. Now, if you're looking for capital appreciation, well, probably would. Okay, but I'm not looking for capital appreciation. I'm looking for cash flow. And that's what this channel is dedicated to. Cash flow. Simply, safely, predictably, and consistently. That's what I'm looking for. I'm not looking to buy here and have the stock shoot up. Because that would mean I would have to sit on the stock and wait for it to move in order for me to get money, in order for me to pay my bills. No, that just doesn't work. All right. Thank you, 86. He's right. It doesn't fit the strategy. Thank you for your wisdom every session. You're welcome, WW. Currently reading Charting and Technical Analysis. Good luck with that, dude. I like simplicity. Okay. You're gonna learn today. Cool name. Have you heard of Benson app where they make trades for you? No, I have not. Okay. Have you seen enough of the Terminator movies? I don't trust the computers as far as I can throw them. The charts tell you where the money is at. They tell you where the money's going and where it's coming from. Okay, you like that? Cool beans. Robert DeLucia. When I said explain better, I mean strategy details. I understand what you're doing. I have no idea what you mean by strategy details. Okay, fine. I take all the companies I like. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Between those 5 lists, that's over 300 companies. You take those 300 companies and you put into a calendar. Calendar will tell you exactly when they pay their dividend. Now, I want to take a look at the stock 2 weeks before they pay the dividend. If the dividend's here on the 2nd of January, I want to be looking at it on the 16th of December. Okay, 2 weeks on a Monday. I want to buy the stock at the opening price at the market first thing Monday morning. Simultaneously, I want to sell the closest strike price to the purchase price for a 1% or more rate of return. Okay, that way I'm getting a consistent, safe 1% every single week on a company that is consistently profitable. Okay, pre-selected dividend stocks. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. It's about 300 companies. Simple, safe, predictable, consistent. I'm not quite sure if to get any more simpler than that. That's an awesome answer. That just would like the steps is all. Simple. Step number 1, choose the stocks. Choose the stocks you like. Step number 2, take them all, throw them into a calendar, and have them listed by when they pay their dividends. Great. 2 or 3. Okay. Make sure the chart and the numbers are correct. If it is in an upward trend, great. The chart will tell you everything you need to know. Here's the 30-day high. Here's your 30-day bottom. What happens? She shoots up, pulls back. Shoots up, pulls back. 30-day high, usually there's going to be profit taking. I usually don't buy when it's this high. I buy when it's bouncing off the bottom. WW, yeah, annoying. No idea what that means, but okay. Frankenstein, good evening to you. Okay, 86, thank you for that. Where were we? Right here. Okay, Linderella. It's a neat name, Linderella. That's cool. How long do you hold on to the stocks before you sell? 5 days, ideally. 5 days. Okay, John. WMS. Okay. What the heck is WMS? It's never a good thing when I say, what is that? WMS. Advanced Drain Systems. It's a monthly, kiddo. Sorry. Monthlies? No. Monthlies just don't work. John, sorry about that. Okay? Monthlies is only 12 months in a year, which means I can only do a trade every month, which is 12 times. No. How about Advanced Auto Parts? You're going to learn today. Okay, we already looked at Advanced Auto Parts today. Okay, see where she is? 30 days ago, we're at 37, dropped to 36, shoot on up to 49. Now we're at 43. Yesterday was the bottom. Today, she's a little bit higher, currently at 44, well over 1%. That's what I'm looking for. However, you're going to learn today, I like 2 days to the upside. Yesterday was a 30-day bottom. Today, it was a little bit higher. Okay, I like 2 days to the upside before I do that. Thoughts on D-Nut? What the heck is D-Nut? Chicken and biscuits, back again. How are you today? D-Nut, Krispy Kreme, Cool Beans. No. Okay? Monthly, I don't like monthlies. The numbers just don't work. Okay? Sorry. Robert DeLucia. Cisco, I'm not sure that it has 20 years of dividends, but there is in a 2 weeks. Yeah, I get that. Cisco, let's go here. CSCO. Okay, we're going to look at historical data. Okay, historical prices, dividends only, and the maximum amount. 2011. So from 2011 to today, it's only 13 years. Okay, so Robert, you need to ask yourself, is 13 years of consistent profits good enough for you? Take a look at the numbers. Okay, it goes 6, 8, 14, 17, 19, 21, 26, 29, 33, 35, 36, 37, 38, 39, 40. Consistently going to the upside. Granted, it doesn't have 20 years, but it does have 13 years. So do you want it at 13 years of consistent increased dividends? Some people don't mind 10 to 12, 13 years of dividend increases. Me, I prefer 20. Cisco, we'll see what happens. Gallant wants to take a look at Baxter. Okay. Now, Baxter is on my list. Okay. Baxter. A year ago, we're at 38. We jumped up to 44, dropped down to 33, shoots back up to 41, drops down. Right now, we're sitting at 30, 13. 30, 13. Okay, so at 30, 5 to 20. Sorry, dude. Okay, Gallant, sorry, look at the numbers. The 30 is going for 5 cents to 20 cents. No, not going to make it. Sorry. Amy, good evening to you. I hope you're doing well. Gallant, AA, was that Alcoa? AA? Alcoa. Okay, so Alcoa, take a look at that. A year ago, we're at 31. We dropped down to 25, shoots up to 45, drops down to 28, back up to 48. Now we're at 37, 38. The 38 is going for 64, to 91. That's close to 2%. Well, I like 2%. Well, let's check and see what it looks like. The last 90 days, 90 days ago, we're at 39. The high is right around 48, and the bottom, well, right around 36. But we're currently at 38. So today is the 30-day bottom. Okay, here's the last 30 days. Your 30-day top, your 30-day bottom. What usually happens at a 30-day bottom? Well, stocks have a tendency to go up because guys like me say, all right, it was at 48, now it's at 38. That's a 10%. That's a $10 decrease. A $10 decrease on a $48 stock is a little over 20% decrease, 21, 22% decrease. So it's a yes for me, but I want 2 days to the upside. If today is the bottom, Monday, Tuesday, I want them both to be higher. And if so, I'll jump in on Wednesday. Okay, wherever the bottom is, because right now we don't know, because it could keep going lower tomorrow. We just don't know. That's what we have to keep our eye on. But Gallant, I do like it, and I would like to keep my eye on it. All right, Ghost Rider. Coles, we already looked at. Zip Nut 067, YMAX, no. They don't have 20 years of increased dividends. Dalton, how do taxes work when I got assigned and then I exercise my other leg to counter the assignment? Well, that's cool. But taxes, that is a tax strategist or tax planner question. I just read the stock information and I interpret my opinion. All I'm doing is just giving you my opinion and entertaining. I sing, I dance badly, but I take a look at the numbers. Anybody can read the numbers. The high right there, the low right there. What does it usually do after the 30-day bottom? Usually goes up. Is it guaranteed? No. Only thing guaranteed is the government's going to be giving you a hard time, and then sometime you're going to die. That's about it. Death and taxes. 38 is the current price. Well, the current price, 38, that's close to 2%. Close to 2%. 2% a week is over 100% a year. Well, that would be cool. Okay, Zipnut, YMAG weekly dividends. No, not weekly dividends. Weekly options. Quarterly dividends. Well, wait a minute. YMAG could have monthly dividends. I don't know. Jellyfish, Sword. Really? Sword? Sword. Sword Group. No, cannot find that symbol. Jellyfish, SWPPX. What the hell is that? SWPPX. Oh, I know what that is. That's a no. Why ask why? If your positions aren't called away, what do you do then? Well, here's the thing. Macy's. Okay. Currently, Macy's is at 1624. So let's say, hypothetically speaking, I sold the 1650s. Okay. If I sold the 1650s, I got a nice premium. And it closed below 1650, which means I still own it, whatever the price I bought it at, which means I can then turn around and do another covered call on Monday and keep doing covered calls every single week until it hits my target. Okay? James David, no. I have no idea what you're saying no to, but I'll agree with you because I'm an agreeable kind of guy. Guru Trader 75. Sound does not have profits, let alone dividends. Well, why the hell would I invest in it? When I say consistent increased dividends, a dividend is a portion of the profits. If they have no profits, then what the hell would I be buying it for? What's your thoughts on MSTR? Well, we just said no dividends, no thank you. MSTR has no dividends, so it's no thank you. YMAX, Misty, same thing. No dividends, no thank you. Ooh, we can do a song and dance. No dividends, no thank you. No dividends, no thank you. Entertaining. Okay, yeah. Sorry. The reason I want dividends is because if and when the stocks go down, because that's all they do. Take a look. Okay, here, 1540, shot up, dropped, shot up, dropped, shot up, dropped. That's all they do. If a stock goes down, well, I want to be reassured that I'm getting higher and higher dividends, because stocks are going to go up and down. The company could be successfully, wonderfully profitable, and the stock will still go up and down, because that's all they do. Because there's a difference between the actual company itself and the stock. Because the stock is a representation of what we, the people, think it's worth. It doesn't have a whole hell of a lot to do with the actual company, the actual running of the company. You know, the lady who answers the phone, Sally, the secretary, she answers the phone. Peter, the plumber, or Ted, the janitor. Those people, they come to work and put in their 40 hours every single week. They have nothing to do with the stock price itself. Okay, the company opens up 8, 9 o'clock in the morning. People come in, they put in their 40 hours a week, and they progress with their work. Did they have anything to do with the stock market? No. If the stock is down, does the president call and say, hey, stock price is down. I need you to cut out early today. We need to cut our prices down. It doesn't happen that way. The stock price is just the public's opinion of the value of the company. The value of the company can be found in the cash flow, the management team, the book value, what they own, what they are owed, what they owe, the balancing of the books. That gives you a good idea of the actual real value of the company. The stock market, that's just our opinion. Okay, if we all agree that it's worth more, well, then it'll go up. If we all agree that it's worth less, well, it'll go down. Perfect example. NVIDIA, NVDA. Okay, NVIDIA is currently at 134.70. Okay, look at it. It was last year at 50 bucks. Well, now it jumped up to 150. That's a 200% increase. Okay, well, it's down to 135 now. What makes it so wonderful? Let me tell you. We're going to go to Yahoo Finance. NVDA. Alrighty, here we go. NVDA, NVIDIA, 1 penny, 1 cent dividend. They're going to share the profits. Well, it's 1 cent. Seriously? 1 cent? But wait, it gets worse. Okay, let's go to statistics. Now, here's where you find out the actual valuation of the company. Okay? Book value per share, $1.74. You're paying $135 for a $1.74 stock. Okay, hold on. Let's take a look on the flip side. Let's take a look at Ford. Okay, Ford's been in business for over 100 years. Okay. The current stock price on Ford, okay, is currently $9.89. Well, what's the current book value on Ford? $11.15. The book value is higher than the stock price. Well, let's look at General Motors. GM. Okay. General Motors is currently at $51.99, 52 bucks. Well, what is its book value? $64.49. So why are so many people jumping into NVIDIA that has a book value of $1.74 and their dividend is 1 penny? All right, General Motors dividend. What's General Motors dividend? Hold on a second. Summary. Earnings per share, blah, 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 dividend. Okay, so General Motors dividends is 48 cents. The book value is higher than the stock price. the dividend is higher than 1 penny. And they are a lot older than NVIDIA. All right, so let's keep going. All right. You sell call or put on Monday. Jellyfish, absolutely. All right. The reason why I sell the calls and the puts on a Monday is because I want weekly cash flow. Okay? Now, there's no trading on Saturday and Sunday, so I can't do it on Saturday and Sunday. If the option expires at 3:59 p.m. on Friday, well, where am I going to get most of the value? Well, first thing Monday morning at 9:31. Because at 9:30, the market opens. 9:31, the orders start getting filled. So from 9:31 Monday morning, okay, the maximum amount of time is 9:31 a.m. Monday morning all the way until 3:59 p.m. Friday afternoon. That's the maximum amount. Okay, so if I do it on a Tuesday, well, I just lost 20% of the time value. Okay, if I do it on Wednesday, well, now I'm down to only 60% left. I've lost 40%. Because most money you're going to make Monday morning to a Friday afternoon. That's it. Okay, let's keep on keeping on. I think that's done for the questions. Are you guys done already? Well, cool beans. You know what? You guys are done. I'm going to wrap it up and call it a day. I am in Vegas after all. And I'm going to go down and have some dinner and enjoy myself. And guess what? After dinner, I just might do this all over again for the people on the West Coast. So, no more questions. You guys have a great day, and we'll catch you again later on tonight or first thing tomorrow. Well, tomorrow night, one or the other. Okay? You guys have a great night, and we'll do this again a little bit later.